All right. Welcome back. Episode 35.
Let's do it.
No Jeremy and no Keith.
Nope.
Uh-oh.
The young crowd.
Yep.
No old folks.
Zero.
Let's not screw it up today.
I like it.
Hopefully they don't listen to that intro.
Yeah.
Anyways, but we have Lisa Schreiber
Mhm.
back and David Aamot.
Hello.
How's everybody doing?
Good.
Good?
Never better.
We got
Yeah.
snow. It's cold.
It's almost
We
Christmas
did get
time.
snow.
Right. We get in the spirit.
Yep.
The question
It's a
is
little-
the snow going to stay?
Probably. I don't know. I mean, it's getting real cold this week, right? So.
Well,
Probably
I
not.
think this weekend is supposed to be a little warmer again.
Oh, okay. Maybe.
It's a
Well,
cold
Last year we
December
had
so
like
far.
green Christmas.
Yeah,
what
I don't
remember,
like
right?
that.
No,
that's
it's
not good.
gross.
I'd love having snow for
As
Christmas.
soon
Yeah.
as January 15th comes, though, the snow's got to go.
Yeah, right.
As soon as Christmas is over,
Yeah,
then
if the festive
then
spirit is
we're
over,
done.
it's
Then
gotta
we're
go.
done.
All right. So episode 35.
Yep.
So I tried to choose some famous players from different sports this time. So we got basketball. We've got Kevin Durant.
Slim Reaper.
Yep. Yogi Berra wore 35 in his rookie season.
I didn't know
I have
that.
to preface that because Jeremy's going to yell at me if I don't preface that because he didn't actually wear 35 for most of his career.
He's the sports aficionado
Yes, he
of
is.
the group. Yep.
Justin Verlander, who
Mhm.
Oh, yeah.
Lisa actually knew.
Yes, I do, because it's like he is or was, I don't know if he's retired yet or not, the star pitcher for the Houston Astros, which is the favorite team of my husband. The favorite
Really?
baseball team after the Twins, of course, right? Yeah. And so, yeah, I saw a few.
How does that work? Being from Austria, you
Mhm.
just come
Yeah.
into the U.S. and you're like, "Yep, that's the
That
one I
team.
want." Yep,
The winning team at the time.
that's my
I
favorite
think,
Who was in
team.
the
I
World
mean,
Series?
the interesting thing, he followed baseball for quite a while before he moved here.
Okay,
But I think it was after his first visit to the US, and I
Yeah.
think that was like the first team or whatever.
oh, okay,
And since then he followed the Houston Astros. But
fair
as
enough.
a matter of fact,
There you
like
go.
this year was the first time he actually he was in Houston for the first time. So
Got it.
there was no other connections, or it was probably a coincidence that he got a fan of the Houston Astros.
Yeah.
All right, and then I got to go with some hockey here too. Tony Esposito, who I'm guessing neither of you
No
two know,
idea.
No.
which is why on our doc I put in parentheses
Chicago
who he
Black
was.
Hole.
Chicago Blackhawk goalie. Just so you guys know.
Mhm.
All right, hot button topic today. We've had some
Yeah.
pretty strong markets the last 2 years.
Yep.
And so
Yep.
we've actually had a back-to-back 20% plus years.
Mhm.
And if things stand as is, this would be the third time that
Mhm.
we've in history that we've seen the second year performance
Yep.
is better than the first
Mhm.
year's performance,
Hmm.
which is interesting
That is
when
really
you
interesting.
put that in context.
Yep.
But last year 26%. This year we're sitting at about
27.
27 right now.
Right now this morning. yeah.
So that's pretty good.
Do you guys think we'll see above 30 this year?
I think you
December's-
could. I mean,
Historically, December's the best month
you get
for
the
stocks.
you get the Santa Claus rally that
Yep.
people talk about. Do we have that? I don't know. I never really.
It wouldn't take much
It's
to
it's
get
it's
us
like
over that
it's like a
hump.
thing, but like you can't expect it to happen.
Yeah.
Right. So, do I think it will happen? I mean, Lululemon just reported they had some pretty stellar numbers on
Okay. Yeah.
inventory,
Yep.
which have
Yep.
always been issues.
Uh-huh.
So maybe that's signaling that consumers are.
And they had a pretty good reaction after they reported.
Yeah, I mean,
They
so
did.
I
it was up
guess,
16,
Yeah.
16,
and because it's up
17%.
16, I assume you're not in it.
Yes.
That's
I
a
said on the
good
podcast,
predictor.
that's one name I cannot
Yeah.
get right. When I don't buy it in front of the quarter, it goes up 16%. When I do buy it in front of the quarter, it goes down 5%.
Yep.
It's just the way.
It's the way
The cookie crumbles.
Yeah. Hey.
So do I think that could happen? Potentially. Just based on what Lululemon was giving in their numbers and recent quarter, maybe the consumer is going to keep spending and spend through what the expectation is. I think the average person is expected to spend like $1,000 this year on Christmas,
Mhm.
Sure.
or on holiday gifts.
Yep.
So if they exceed that, or there's the expectation that they're going to exceed that, then maybe you do get the.
So far this year too, consumer debt has just been blown out of the water. and there's
Yeah.
been no sign of stopping. So
No.
I could
Yeah.
totally see that number being blown out.
Yeah. So we'll see, but I never count on it to happen.
Yep.
But that is a thing. And the other part of this that I wanted to bring up too was a chart from Yardeni who shows the different bull markets for the first 500 days
Mm-hmm.
since 1966, and this was the third
Mhm.
best bull market
Mhm.
in the
Crazy.
first 500 days that we've had since 1966, which is
Yep.
pretty impressive.
Mhm.
Yep.
The two ones that were better was post-COVID and then post-Great Financial Crisis.
Mhm.
So I guess not coming off of 2022 was kind of a bad year, right?
Yep.
I mean, markets were down 18%, bonds were down 13, right? It
Yep.
doesn't feel good, but it wasn't like a recessionary disaster that we saw in the quick snap of COVID, people getting laid off,
Yep.
economy essentially shutting down, and then obviously Great Financial Crisis,
Yep.
the housing bubble, a
Yep.
lot of stuff happening through that.
Mhm.
So the fact that we've had this good of a market, I think, for the last 2 years, and you guys can give me your opinion on it, but I think the last 2 years, the fact that it's the third best bull market for the first 500 days is pretty spectacular.
Mm. Yeah, I
Of
think
course.
when investors see that, or retail investors, you might think, okay, we have such a good run for 2 years now, like back to back over 20%.
Yep.
How much more is there in the cards, right? And maybe, some investors get a little bit nervous because the third year can potentially be that great and waiting on the sidelines. But the interesting thing is the chart that you just mentioned, which especially looks at the third year after the first 2 year back to back minimum of 20% returns, that on average the market in the third year after two such stellar years get like 12.3%,
Interesting.
which is pretty good actually after two like such great
Beats the
years.
long-term average.
An average
Yep.
of 12.3% in the third year. So yeah.
Well, I mean, the average bull market is what, 4 years,
Mm.
5 years, something like that. So the fact that we're 2 years in, you still on
There's room
a
to
statistical
run.
basis,
Yeah.
you still have 2 to 3 years of this bull market to
Mhm.
keep going, right?
Yep.
So to that point, it
Yeah.
doesn't mean that next year we have to have this disastrous
Yep.
year,
No.
but I think, and you guys put out a piece too, and it shows that on average markets correct about 10% every year, right?
Yeah.
I mean, do you guys think we're going to see that next year?
This year at the end of, what was it, July
Mhm. It was
16th through the 5th, we
8%, I
lost
think.
8.3%,
Yeah.
and it's normal, and then everything ripped back.
Yep.
I think we could see a number of those. I think guarding some kind of exterior catalyst in the market, we probably will see pretty steady returns. Everybody at the beginning of this year was looking at Warren Buffett, you know what I mean, on offloading like Bank of America,
Apple.
offloading Apple.
Yeah.
And saw how much cash he was holding, and they thought that spelled some great warning sign for the economy. The economy is really good right now. There's no reason. People can point to valuations. People can point to debt, consumer debt. As long as people keep spending, as long as GDP is positive, earnings growth, what was 9.5 projection for the end of 2024, looking at 15 for the end of next year.
Yeah.
Don't want to get ahead of myself here, but I think it could be choppy, but I think if you hold throughout the end of 2025, you'll probably be pretty happy with your results. Maybe not as happy as you were the past 2 years, but
Yeah.
it'll be
Pretty,
it'll be
yeah,
decent.
yeah.
Would you agree?
Yes. To David's point, I think economically we are still in a very good spot. Like
Yep.
the labor market is still holding up very well. Inflation is, it's getting a little bit more choppy on the way down, I would say.
Yeah.
What we saw, we just got new numbers today, with core inflation staying the same, but overhead inflation ticking up a little bit.
Mhm.
So that is a risk factor that will probably also get a little bit more attention going into next year. And again, like economically overall very good, but there are risk factors out there. We have a change in administration, potential policy changes when we look at tariffs or tax cuts that could reignite inflation again.
Yep.
So
Mhm.
that is a risk factor.
Yep.
Again, the Fed trying to figure out where the neutral rate is, trying to keep that in the last home stretch, basically back
Sure.
to their magic 2%. And then we have some geopolitical risks out there. there's a lot going on in the world, right? Still,
A lot, yeah.
and especially when we look at tariffs and then U.S.-China relations with the change in administration, what we already heard, and there's nothing clear yet, nothing implemented yet, but what we heard, probably the relations between US and China will be not that nice overall. So that is a risk factor, and then we have some other things that we do not see yet, that can come as a surprise, that probably will happen. And especially when there's a surprise and when the market gets surprised about something, it's normally not positive for the market in the first reaction.
Well, that's a good point. So markets have to hit new highs to be where they are today, right? That's just the nature of, you have to keep going up to be where we are, right? So I think this year we've set, what is it, like 58
like 53,
new
55,
highs this year,
something like that.
And so we always get the question of, well, is the market going to go down next year with all of these different concerns that are going on? But I think at the end of the day, there's always concerns, right? Every year there's going to be concern, and a lot of them tend to be the same, right? We've had inflation for the last 4.5 years now, or not 4.5, but 2 years, I guess I should say, right? Of that being a major concern and talking point. But we know that concern, right? The market knows that concern. So for something like a COVID or GFC, or even going back further, 01, right? There's all these things that are surprises that you can't model in risk, right? It's not these known things that are concerns. Yes, we watch those, and we have to understand the risk that we're taking and how those concerns are going to affect those positions in a portfolio. But it's the unknowns that cause the major calamity, right? That's what
the sharp movements,
the black swan. It's called a black swan for a reason, right? So to that point, there's always going to be those concerns, geopolitical risks all the time, because we're a globalized world at this point, right? So everything that happens, manufacturing is overseas, various different countries, tensions within that area is going to affect how companies do their business over there as well, right? So there's so many concerns that we can that anybody could go through, but those are known items, and the market sees those and tends to say, we know how much risk this is going to cause, but companies are going to still do well regardless of that. So just my 2 cents.
I think too, if sentiment around AI starts to pull back and investors don't want to see as much CapEx spend on all these semiconductors and all that, and then if tariffs are sustained for a longer period of time, I think then you could see a larger pullback on some of the known issues. But I completely agree. I think it's the exterior catalyst that will really cause a downturn.
So David, you brought up the market was expecting 9.5 this year. Maybe when all is said and done, maybe we get 9 or maybe we get 10%. But right now the market is expecting 15% for next year, right? And and the market's a forward-looking thing. So if we get 15%, will the market be strong?
Yeah, 100%. I think so. And
you don't think we're pulling any of that forward right now?
Again, I think we are. But right, so take exterior events out of this, right? Take unknowns. If GDP is as projected or positive,
which should grow at 2.2% as of now, and the average is 1.8. So I think that's good.
If GDP is positive, I think you don't even need the 15. Now, when you say good market, you know what I mean? Do we mean another 25%?
Do you get the average 12% market if earnings come in at 15% growth?
I think we can expect that. And now I think a lot of it, you're right, is pulled forward. But I think the investor for the last couple of years has not been worried about valuations. So why now? You see valuations. But right. As long as there's health in the economy, I don't see a reason for a downturn in the market.
Yeah. If we get 15% earnings growth and the market goes up 12%, it means valuation's coming down because you're growing into it.
If people all of a sudden get scared of credit card debt, get scared of their mortgage debt, you know what I mean? Those are major issues that I think could cause everything to cause a little bit of a correction there. But I think we will see a healthy market if fundamentals remain strong.
Lisa, would you agree?
I agree overall. I think
Okay.
the 15% is a little bit too optimistic as well.
Okay.
To David's point, yeah, analysts are normally coming in a little bit hot, and that kind of comes down a little bit as we progress through
Well,
the
so let me
year.
ask you this. So
Yep.
if next year we don't get the 15%,
Mhm,
like let's say expectations come down to 10%,
mhm.
do we still have a good market, or do you think it's a poor market?
I think so.
Okay.
Yeah, I think that it does not imply that we are having like a bad year overall when it
Yeah.
comes down a little
Uh-huh.
bit. So I think if we come down from the 15% to the more lower double digit growth, I think that would be enough.
Okay.
That is still a
Yeah.
little bit more than this year. So we are still growing year over year. And I think that could still be the basic of a good year, even if we come down a little bit from that, because overall I think it is seen to be a little bit optimistic as well. So I think
Got
there's
it.
a little bit a wiggle room for adjustments before everything is
Got it.
yeah
I think
so.
too,
So-
going into 2024, we saw expectations for earnings growth were what, like 12%,
Mm.
11, 8%. And now we might see
A
9.
little bit.
And then
yeah.
the consensus growth for the S&P was not anywhere close to the 27% we're seeing.
Well,
right
they're always
now,
going
right?
to target 8%.
They're always going to throw out that 8 number.
Plus
So
or minus a
I
percent.
don't think pessimism is a strategy when the markets are strong,
Yeah.
when the economy is strong.
I think my opinion on this is I think we start to the market tries to grow into the valuation. So
Yeah.
if we come down, let's say the 15% turns into 10%, maybe you get a 6% market next year.
Yeah. Yeah.
That way you start to grow into the valuation. You don't have to have this major meltdown.
Yep.
But I think it's going to be a choppy year.
Yeah.
I think you do see for sure 10% correction.
Yep.
Potentially 2 would
Sure.
be
Yep.
my initial take on that. But
Yep.
we'll see.
How do you think
we'll
this-
have more thoughts on that.
How do you think this compares to 2017?
So it's interesting, right? Trump was obviously elected in 2016.
Yep.
A lot of tax laws were being thrown around. The current tax law was the one that was being discussed. And 2017 was a weird year to be in the business because it felt like the market just went up 20 basis points or 50 basis points every day.
Yep.
And it just every day just slowly climbed higher. And you saw a down day and you're like, what's going on?
Yep. Yep.
So do I think that 2025 is going to be a repeat of 2017? Absolutely not. I think there's too much, as you said, there's a lot of concerns. There's a lot going on. I don't expect another 2017. At least right now I don't, but
I
we'll
agree.
see. Yeah.
Yeah, me neither.
All right.
Yeah.
So let's move on. So I have a did you know? And this one actually shocked me a little bit. Lisa brought this one up to me, and so I wanted to talk about it. So when we talk about the world as far as stocks,
Yep.
I've always been under the impression, 60% is US, anywhere between 50 to 60% is US, depending on the index. The rest is international, and you can break that up into developed and emerging.
Yep.
So Lisa sent this to me the other day. Right now, the MSCI World Index is currently 74% US, which is mind-blowing to me. The next largest is Japan at 5%. Right. Then you start to get into the UK at 3, Canada at 3.
And all the others.
And then all the others. Like international markets right now have no impact on the world index, which is quite interesting. So do you guys think that at some point this comes back down to 70, 65, 50? Like, do we normalize this at some point? And we've talked about the differences between international markets and US markets and technology and development. But does this normalize at some point, or do we just keep growing as a percentage of that pie?
I don't see that coming down, the percentage of the weight of the US anytime in the future, to be honest.
Sure.
And to your point, and we discussed this in other episodes, has something to do with the different sector composition and how the companies are composed in the international markets and the
Mhm.
S&P.
Mhm.
And I think that just keeps on going.
Yeah.
Except something else is happening in international markets, but then it must happen in so many different countries simultaneously, basically, and an uptick in all those sectors. I don't see that anytime soon, to be
Yeah.
honest.
David?
Yeah, I agree. I think, especially kind of in the immediate future, we're definitely seeing a more shift politically to kind of an American first mindset. I mean, the U.S. share of the stock market right now is almost 2.3x the GDP of the U.S., which is an all-time high. So that being said, there could be 10 years from now, we could go back down to 65, 60, 55. But I don't think, especially over the next 5-6 years, I don't think so. I
Mhm.
think the companies here are so dominant. I think there's going to be a huge push to keep those companies here. I don't think these massive companies are going to lose a ton of market share. And I also don't see them going offshore.
Okay. Well, so here's an interesting question, and we have a resident expert on this that can answer it. My question to you, Lisa, is do Austrians invest 75% of their portfolio in the US and only 25% in international markets? So that's question one.
Yep.
Question two is US considered international when you're living in Austria, or do you bucket out US and then international developed, local Austrian or Austria,
Yep.
and then emerging markets? Like, how does
So
walk us through this, because I'm curious.
So like the typical, and I talk about the retail investor,
Yep,
like
yeah.
the average
Sure.
retail
Yep.
investor in
Yep.
Austria is absolutely not investing 74% in the US stock market, because Europeans and especially Austrians, we're homebodies, right? And we're I would say there's a strong home bias as well.
Okay.
And again, there's generational shift to more, open and different asset classes as well. But the general retail investor, how I experience it, is a more home bias.
Do they have
person.
any US exposure?
Yes.
They
So I
do.
would say there is US exposure, but not in that
Is it the
percentage.
majority? Is it like 40? Is it 50?
It's way less than that.
Really?
It's way less. than that.
Would you advise somebody to bump it up to 50, 60%? What would you say?
I mean, it depends. I mean, and when we get into that, we have to start like way back, right? The whole investing, the way people invest in Austria is completely different than people invest in the US. So there's not as much in the stock market to begin with.
Okay.
So people are way more conservative, see it way differently than US investors
Sure.
to begin with. And when they invest in the stock market, and it's more Germany that's predominant, the investable universe,
Okay.
with the DAX, that's because
Yeah.
Austria is pretty small. We
Yeah.
have like a stock market index, but that is basically on an
So
international
the stocks that
basis.
the Austrians own, is it mainly German companies?
On the
Yes,
DAX?
I would say
Okay.
mainly German, Austrian companies as well, but mainly German and Europe as a whole.
Okay.
But I would say strongly German. So that
Okay.
is where they kind of focus on. When we talk about the S&P 500,
Yep.
they talk about the German stock market index.
Got it.
I would say, and there's exposure to the US, but not as much, not nearly that.
So then
And
when you guys are breaking out like exposures, like here we have US, we've got international developed, which is Europe, Japan, and then you've got emerging markets, which is Mexico, China, those kinds of countries, India. How do you guys keep US separate from international, or is US wrapped into international? So when you're comparing like a world index, international is 98% versus Austria.
so I think
Does that make
More
sense?
than that?
Right?
it makes sense.
99.5%?
Because when you live in Austria, like it gets international pretty fast.
Yeah.
I said that in
Yeah.
prior episodes, right? We have a very
Drive about
small
30
Yeah.
minutes.
right. So I would say Germany technically is also international. France, Italy, that is already international. But I would say there's a difference in how people see that compared to the US. So yes, international.
So they would say probably like Europe is local.
Yes.
Current
yes.
and
They
rather than
would see that
saying I
different,
invest in
yes.
Austria, I invest in Europe, and
Yes.
that's their US.
Yeah.
Okay.
So I would say
Interesting.
it's different. And
Yeah.
when you see what technically would be international for people over there and what is how they see international, right?
Yeah.
Like US is
Very
pretty
different.
much international
Yeah.
and pretty much seen differently than all
But they don't break out US, international, and then home Europe, and then emerging markets. US is wrapped into the international developed.
generally, like theoretically, yes.
Okay.
But that's not how people see it.
Okay.
Right. Generally, it is international.
Yep.
Overseas, yes, but
Yep.
that's not how
Yeah.
people feel it and how
Okay.
people do it and how people invest. But generally, the MSCI World, when we see it like as an index, I heard way more about that when I lived in Austria than here. That people invest in the MSCI World or see that as a
Yep.
kind of as their world allocation.
Huh.
And here it's more like, and US investors are homebodies as well.
Yeah.
Your home
Probably
universe is
even
way
more
more
so.
bigger, right?
Yeah.
But US investors, generally speaking, is
US
also
investors say, why invest in international markets?
correct.
That's
Yeah. So
exactly
it's not
right.
only Europeans that are
Yeah.
homebodies, also the US, but it's a little bit different in
Sure.
the growth
Okay.
and in the size. But
Yeah.
I think again, MSCI World is seen as the allocation for international. But they would not say, okay, 74% of that should go to the US. I
Got
don't
it.
think so.
Yeah.
Like the average retail investor does not
Yeah.
see international
Sure.
in the way the theory would see it. Yeah.
All
Yeah.
right. All right. So last segment here, we'll do spaghetti wall. And we'll do this or that. We'll try to have some fun with it here. All right. So we'll start with winter activities. This or that, snowball fight or sledding? Lisa?
I love me a good
Lisa?
snowball fight.
Okay.
So yeah, snowball fight.
Yeah.
Yep.
I'd have to go with sledding. I love sledding. Get some ramps in there.
We can do if we can do a snowball fight while sledding. That's not mutually
Yeah.
exclusive.
Yeah. Building a snowman or making snow angels?
Snowman.
I'm a snowman guy.
Snowman.
I love making snow angels.
Snow angels. All right. Ice skating or skiing?
Skiing.
Ice skating.
Ice skating. Hockey. I got
Yeah,
it.
right.
I gotta
You're
go, I gotta go with
biased.
it.
More of a
Um,
Minnesota thing.
And David, like downhill skiing?
Downhill
Or,
skiing.
okay, yeah.
Yep.
Mhm.
Yep. Yep.
Not cross country.
There's a really good cross
Mm-hmm.
country course close to where I grew up back home.
Mhm.
But yeah, no.
Yep.
No.
All right.
Downhill.
I grew up doing cross country skiing rather than downhill.
That's right.
Yeah.
Yeah.
Staying indoors with hot chocolate or venturing out into the snow?
I would say a little bit of mix of both.
It's this or that. You can't
You
change.
can't do and.
I can
It's
do and
or.
I have to do all winter just one of the two.
The question isn't and or. it's
Okay,
or.
excuse me, Tyler. Then I stay indoors with a hot cocoa.
Okay.
Venturing out.
I'm venturing into the snow. As
Yep.
much as I love hot cocoa, I'll venture into the snow.
Okay.
Yep.
All right.
Yep.
Winter treats.
Yep.
Hot chocolate or apple cider?
Again, I have to decide
Yes.
because it's not and, it's or.
Or.
Okay, I take apple cider then.
Okay.
Give me the hot chocolate.
I'm going apple cider on this one. Eggnog or mulled wine?
Well, I have to take eggnog, which I don't like either, but hot alcohol has some weird influence on me, so no.
Okay. David.
Care to expand? Lisa?
Let's not expand.
No, eggnog.
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 Eggnog. I actually have some in my fridge right now. I love it.
Oh,
It at home or at work?
At home.
Oh, okay. Mhm.
eggnog's good.
Candy canes or chocolate truffles?
I take chocolate truffles.
Yeah, chocolate truffles.
I'm not a big peppermint candy
Mm,
cane
It's
Mm,
kind
guy.
of hard to eat.
Yeah.
It gets sticky.
Yeah. I'm going with chocolate
We are
truffles.
already old. We have to take care of our
That's
teeth.
exactly right. That's exactly right.
All right. Winter fashion. Beanie or earmuffs?
Beanie,
Beanie.
Beanie. Slippers or boots?
boots.
I saw that
I
one
wasn't
coming.
expecting. I actually.
I did see
thought
that
you were
one
gonna-
coming.
I'm gonna go boots.
Really?
Yeah.
Oh, slippers.
You
Dur- during the
you were
winter-
wearing boots.
You're
2
alone
days
with
ago.
this, Tyler.
Anytime I'm home and have to like go to the grocery store or the tool store or whatever,
You're gonna get
I've got
soggy. You're
I've
gonna
got
get soggy
slippers on.
slippers.
Yeah, I get new slippers every year. They're like $12 from Target.
Oh,
Um,
discount king.
All right.
I don't hate that.
Winter weather. Light snowfall or big snowstorm?
Light snowfall. Like, how weird is the other?
Give me a big
Choice.
snowstorm, and
Oh
then
my
you can stay
gosh.
in.
I'm a big
And then you
snowstorm.
got a nice ski
Yeah.
hill at the end of it.
Yeah.
Oh my gosh.
Yep. Yep.
Crispy, sunny winter day or cloudy and snowy.
Crisp, sunny winter day,
Crisp-
and like
crisp
doing
sunny.
a
But the
nice
crisp,
walk outside.
the crisp, sunny day has to have snow on the ground.
Yes,
Yes.
right.
Yeah.
That's
I want the
correct. Yep.
crunch,
Yeah.
the
Yep.
crunchy
Yeah.
snow
Mhm.
too.
Yeah.
Yep. Yep.
Frosty mornings or snowy evenings.
Snowy evenings.
Snowy evenings.
Yeah, me too.
Yep. Yep.
All right. Winter entertainment. We got two more here. Two more segments. Classic Christmas movies or new holiday rom-com.
What is the new holiday rom-coms? Is it like the Hallmark movies and stuff?
Just yeah, go with
Okay.
rom-com. Just not even
This-
take out the
this
new.
should
Just go
not-
with
this should
holiday
not be
rom-coms.
controversial. This
I
should
take
be
the
easy.
classic Christmas.
Yep. Classic.
Classics.
Yeah. Okay. I was gonna say
Rudolph and
Yeah.
Elf.
Yeah.
And
yeah.
yeah.
Oh yeah.
Lampoon's
Home
Christmas
Alone.
Vacation and
All right. Ice hockey or figure skating.
Neither.
neither.
Have you ever had skates on?
Yes.
You have.
Like I can ice
You can
skate.
skate? Okay.
Yes. Yeah, I do that. But I think it's more figure skating than ice hockey. But
Okay,
it
ice
doesn't
hockey or
all
skating.
skating.
Okay.
Maybe hockey if I had to choose one, but I'm not a big skates guy either.
Mm.
Do you know how to skate?
I know I've been
Okay.
on skates. Yeah,
Well, I guess
Yeah.
you're Montana. You should know how to skate.
I know how to skate.
Yeah.
Yeah.
I'm hockey. Shocker.
Shocker.
Reading a book by the fire or binge watching holiday specials.
And reading a book by the fire.
Give me the
yeah.
binge watching holiday specials.
I'm not a book
late
reader.
late into the night. Late
Yep.
into the night.
All right. Winter travel. Mountain cabin getaway or city winter festival.
I would have answered that completely differently before I moved to Minnesota, but now mountain cabin getaway.
Mountain
Give me
cabin
the cabin.
David.
Mountain cabin
Okay.
getaway.
I'm not sure on this one, but I'd probably have to go with the mountain
Mm-hmm.
cabin getaway. All right. Tropical escape or snowy staycation. Well, we know Lisa's because she was already there.
Yeah, but like I still prefer the snowy staycation. Like
Really?
for the real Christmas celebration. I don't know. I always, like that's the children memories, it's
Yeah.
snowing, it's Christmas tree, and it's not celebrating Christmas at a beach. So I go with the snowy staycation.
Yeah.
If it's the mountain cabin getaway, give me the snowy staycation. If you're in the city, give me the tropical escape.
Okay, yeah, that's good.
I'm more the snowy staycation.
Mhm.
Growing
Yeah.
up, we never
Yep.
went anywhere
Yep.
and always had
Mhm.
Yep.
had the snowy family
Yeah.
Christmas. So that's mine. All right. Well, that wraps us up. Thanks, guys, for being on.
Yeah.
Thank you.
I guess we'll see you guys next time. And until then, take care.